You're with us here on a fresh new edition. It's the last trading day of the week. The market is not doing very much. I mean, actually, all week, it's been the trend. The Nifty, the headline indices have basically gone sideways. The broader market has done much better. I mean, actually, if you need any more evidence, you only just need to look at the Nifty for the week, which is down about 1.3% or so. And if you look at the Nifty sort of mid and small cap parts of the market, you will see what I'm talking about. I mean, that index is up about 0.25%, and I think similar will be the case for the Nifty small cap as well. I mean, actually, the Nifty small cap index is up 2%, 1.9% in terms of trade. So broader markets continuing to outperform, and the enthusiasm which we are seeing out there as far as mid and small caps are concerned, that continues absolutely unabated. In moments from now, my colleague Surabhi Upadhyay will also be with us. But let's not sort of waste time. Let's go straight across to the stock, which is moving and moving strongly. I'm talking about Aurobindo Pharma. The company's board has approved the transfer of its Unit 4 facility to a wholly owned subsidiary. And it looks to essentially consolidate its injectables business under one umbrella. I mean, the market has been wanting this for a while, in the sense that, this opens up room for monetization down the line. I mean, I'm assuming that is the reason why the stock is being bid the way it is. Ekta is joining in, though, with all the details. Ekta, over to you.
Well, yes, Aurobindo is in focus because the board has approved the transfer of its Unit 4 to Eugla Pharma Specialties, which is a wholly owned subsidiary of the company. Now, the company was looking to consolidate its injectable business under one umbrella, so this restructuring was largely expected to happen. Remember that the company has already merged its injectable plant Unit 16 with its subsidiary Eugla. Analysts say it is a move which is a step closer to exploring value unlocking options. Now, just to put it into perspective, the global injectable sales are estimated to grow to around $700 million in the next 2 to 3 years. It's at around $395 million in just the generic injectable sales. If you add the branded, it comes to around $500 million. Auromedics, which is the generic injectables business in the US, is tracked quite closely. It was down around 10% year on year in FY21. In terms of valuations, remember that Aurobindo has always traded at a discount mostly to its peer valuations, so it's trading at around 15 to 16 times FY22 and 14.5 to 15 times FY23 PE. If you compare it to pure play injectable companies, then maybe there is some way to go. If you look at Gland Pharma, trading at around 40 times FY22 and 28 odd times FY23. Kaplan Point, trading at a historical PE of around 20 to 21 times.
Ekta, thank you very much for that. I mean, Aurobindo is relatively cheap as compared to other peers. It's up 4% right now, as I said. Let me welcome in my colleague Surabhi on the show. Surabhi, good morning.
Good morning, Prashant. Well, it's good to be back after a couple of days off. But I realize that at least from the market price action point of view, not much has changed at the index level. It's absolute consolidation, right? And that continues to be the state of things this Friday morning. Just very quickly, let's pull up the contribution chart to talk about the push and pull factors today. You have some names on the upside, and Reliance is firing, and that's good news for the bulls. So are some of the major financials like an ICICI Bank, Bajaj Finance also on the upside. But the profit taking continues on the metal side of the market and on IT, and that's a trend that is intact this morning as well. So your TCS, Tata Steel, JSW Steel, a lot of these names, HCL Tech, a lot of these names are under pressure, absolutely flat at the index level for sure. So let's keep it with stocks then and move to the next one. And this is our standout brokerage report of the morning as well. Nimesh alerted us about this, and indeed it's another pharma stock that's buzzing around on this big upgrade. Nimesh, tell us more.
Today seems to be a pharma day, so today's standout report is on Strides Pharma. Macquarie has upgraded the stock to an outperform now from neutral, and they've raised the target price to 1,000 rupees from earlier target price of 908. Now they believe that after a difficult FY21, they expect a strong 20% EBITDA CAGR between FY21 and FY23, and the key reason for their upgrade is they believe that the street is undervaluing the potential upside of Strides from its 33% stake in Stelis. Now, Stelis is a company which is doing the Sputnik vaccine, and they believe there could be a bigger opportunity from Sputnik vaccine, and also the CDMO segment will drive earnings going forward, and hence a big upgrade coming in. In fact, they are valuing Stelis at $725 million, and on back of that, they've raised the target price on Strides Pharma to 1,000 rupees, a potential 30% upside from current levels.
All right, pharma and more pharma. There is Aurobindo, and then there is Strides, and there is more actually, which we will focus on as we go along. Mahindra and Mahindra is the other stock in focus. The stock should come up. This is on the back of strong tractor sales that we saw in the month of June. Numbers came yesterday. Total sales are up 32%. Exports jumped over 90%. The company is optimistic on tractor demand in the coming months as well. Earlier in the day, we spoke with Hemant Sikka, President, Farm Equipment Sector at the company, who said that they will wait till September before raising full-year tractor guidance, but added that optimism is back as the second wave of COVID-19 has subsided. Listen in.
Looking at the months going ahead, I think we are getting into a very high base in quarter 2, quarter 3 and quarter 4. So I would suggest that we wait for July and August, see how the monsoon pans out, and then maybe at the beginning of September, we will be able to revise the guidelines. Overall, the Rabi procurement has gone along very well. Farmer is looking at a reasonably well monsoon progress, and the cash flow in the rural heartland is very positive. Also, with the COVID wave 2 subsiding, the confidence is coming back. It was a play of two factors, clearly little bit of pent-up demand and also some fresh demand coming in. And that's why June has played out to be so well for the industry overall, leading to a very strong performance in quarter 1. Going forward, if the monsoon is progressing quite well, little bit of slowdown in last week or so, but if it catches up by 7th, 8th of July, we see no concern on that. The sowing activity is going along well.
Okay, that is Mahindra and Mahindra. From micro company specific information to slightly more macro top down. This is a CNBC-TV18 exclusive. The union government's decision to revert to centralized vaccine procurement could take the government's vaccine expenditure beyond what was budgeted, which is 35,000 crore rupees. That's the word coming in from Revenue Secretary Tarun Bajaj. He also said that the GST run rate collection could touch an average between 1.15 lakhs to 1.25 lakh crores in the coming months. And that is if the economic situation remains favorable. Also talked a little bit about rising fuel prices at the pump. Listen in.
We should be anywhere between 150, 120, 125 as an average figure for GST in the coming months. I have always been conservative with my figures, as you might have seen in the budget document also. There was much lesser activity which happened in the month of May, and we are able to monitor that, taking into account the number of e-way bills and the value of the e-way bills. So they were definitely lower than what we saw in the months before that. The expenditure is definitely going to be higher than 35,000 crores of rupees now that the central government has taken the responsibility of vaccinating every individual in the country. So it could be 50, 60 or something like that. I haven't done the maths, but it is likely to be higher, and this is the figure or around that I have been hearing. Let me very candidly say that the excise duties on fuel is a complex issue. Also, there is a question that it is not only excise duties, but it is also VAT, which is levied by the various states at various rates. So if excise duties move, the VAT also needs to move in tandem, not in opposite directions, for the benefit to go to the consumer. So I would say we are keeping tab on all these things, the impact on consumer price index, whether it will have such a, and what is the amount that I reduce.
Well, we just hope the governments, both states and centre, take a view on things really quickly when it comes to petrol and diesel prices. They're really pinching at the pump. All right, on that note, we'll take a very quick break. We'll come back on the other side and focus on commodities. Manisha will join us, and today she'll give us an update on the monsoon situation as well.